We have completed with the section A concepts, and now we will be walking through section E important topics. Okay, so section E is all about the internal controls. Okay. So what are these internal controls in the sense? In an organization, there will be many possibilities for errors or frauds to take place. Okay. So to prevent and detect those frauds and errors before they take place, we have internal controls in place. So section E is all about how an organization is run and what are the rules, regulations that we follow, and how internal controls help us to prevent and detect the frauds and many more. So the main concepts that we will be covering in section E will be about our corporate governance, internal controls, FCPA, that is Foreign Corrupt Practices Act, and then Sarbanes-Oxley Act, followed by external audit opinions, and internal internet security and cybercrime, followed by business continuity and disaster recovery. And at the end, we have systems control. Okay. So first up, what is meant by corporate governance? So you can tell me in your own sentences, what is meant by corporate governance? What is the meaning of governance, or what is meant by the corporate governance? No idea. Okay. So corporate governance is one of the most important pillars of the organization. Okay. So what is meant by this corporate governance? Let me tell you. So when we start a business organization, then we will appoint a lot of job roles. We will be appointing a lot of people. Okay. And now, just by having a plan as to what our objectives will be, what our products will be, and what are the various job positions in the organization, only these things are not sufficient for us to run a business properly. Okay. So if it is an organization, it is nothing but a small part of society. Okay. And to and you will have to manage that small part of society very well in order to reach your business objectives. Okay. Now, what do we have to do? We have to give them all the job roles which are present in the organization. We have to tell them what are the rules, regulations, principles, and what is the culture that we are going to follow, what are the values that needs to be present, and many more. Okay. So this is how we govern all the employees, managers, and the top level positions in the organization. That is important. Okay. How you drive your people in the organization towards your objectives. That is corporate governance. Okay. Corporate governance is very important. It's the basic foundation upon which entire organizations practices are present. Okay. So corporate governance is very important. Now, it means all means by which businesses are directed and controlled. It includes all the rules, regulations, processes, policies, procedures, institutions, and laws which is required to govern your organization. Then, who prepares this corporate governance? Who has this responsibility of corporate governance in the sense? The tone at the top. It is the ultimate responsibility of board of directors and the management. And again, we have a breakdown here. The tone at the top or the top management, they will have the responsibility to make sure corporate governance is very well practiced in the organization. Board of directors just help them in planning and they will have the oversight responsibility. ultimate responsibility for making sure that corporate governance is very well in place in the organization is the responsibility of management. Okay. Then, if we have a very good governance, that will be a foundation for our internal control. So, what is this internal control? It is our attempt to prevent and detect the fraud before it is taking place. That's internal control. Suppose you have a very good governance where you are giving proper rules and regulations and you are giving everything properly to your employees. Every directions you are giving properly to your employees. At that point of time, when you encourage moral behavior in your employees through good corporate governance, nobody will indulge into these activities of errors and frauds. So that is why if we have good governance, half of our tasks in creating internal controls will be done. Okay. Now, next up we have agency problem. So what is this agency problem? So agency problem occurs when the aim of managers is different from the aim of owners of the company. Okay. So as the owner of the company, they will be planning to reach the highest level of profitability. Okay. The owners always, what do they want? They want to expand their businesses. They want to earn more and more profits. This is what owners focus on. But think in the perspective of the managers. So what is the requirement of managers? So they will be working for salaries or they want promotions. This is manager's perspective. Okay. And both the individuals in the organization, they have different aims. Okay. So when they move in opposite directions to achieve their needs, we can't achieve our organization's objectives. Okay. That is called as agency problem. Now we have to sort out this. So how do we sort it out? So it can be done in this way. Okay. Anyhow, we have to reach ultimate objective of our organization, which is competitive advantage and profitability, and to enhance the shareholder wealth. This will be our ultimate objective. Okay. Now what the owners of the company do? They say the managers that if you help us achieve this profitability, you will be getting very good incentives and promotion. Okay. Now, because to get this incentives and promotion, our managers will be working towards organization goals. Okay. And on the other hand, the owners of the company, they will get their objectives done. And now both the goals are meeting together. So goal congruence will help us solve the agency problem. Okay. Next up, we have the concept of governance, risk, and internal control. Okay. So now, how is governance, risk, and internal control connected with each other? Okay. Now, in a business, the day you plan your strategy until the day your business ends, every day, starting from inception of the business, when you plan about the business till it ends, risk is present everywhere. Every day, in every step that you are taking, risk is always there. Okay. So if you ignore this risk in your business, you will be subject to losses. So now what do the top level managers do? They don't want to ignore this risk. They want to understand it better and they want to manage it better. Okay. So now risk, obviously in any given decision, when you want to plan it, you have to consider the risk factor. Okay. So while planning the corporate governance also, you will frame it in a way that if any risk takes place, your organization is ready to face the risk, to reduce the risk, or to overcome the risk. Okay. Now, board of directors and management set the business strategy. And in business strategy setting also, you should consider risk. So this strategy, when we say, it is our ultimate plan, our unique plan, which will help our business to sustain. Okay. And when you're planning such a brief plan, futuristic plan, you will have to consider various factors, external factors and internal factors. Okay. And if you consider the external factors, there itself you'll have many risky factors. Okay. So now when they consider the business strategy, they will also have to consider risk. So now to consider the risk, they need effective risk identification, assessment, and management process. This is a prerequisite in any given company. They have to have good risk management processes. Okay. Now, in order to have your effective risk management, what do you need? You will need effective internal control system. Why do we need effective internal control system? Because we need to prevent any frauds or errors or any risk before they occur in the organization. That is why we need effective internal control system. Okay, that is how it is interconnected. For good internal control system, you need good governance. So if you have good governance, then you will be having a proper structure for risk management and internal controls. So that is why governance, risk management, and internal control, everything relies on each other. Okay. So next up, what are the principles of good governance? So we understood how important good governance is for our organization. Now, how to ensure that our corporate governance is good? We will have to follow some principles. So what are they? First one, it is board purpose. Okay. So now there is the distinction between stakeholders and shareholders of the company. Okay. Can you guys tell me what is meant by stakeholders and what is meant by shareholders? What is the main difference between these two terms? You can unmute and answer, or you can also type it in the chat box. Who are stakeholders and who are shareholders? Very simple terms. Hello, guys. What is meant by stakeholders and the shareholders? Why have you guys become less interactive in today's session? Very simple terms, right? Shareholders are the one who own the shares of the company. Good. Then who are the stakeholders? Who are the stakeholders? Okay. Those who are interested in company's activities and affected. Yeah. So that is the major distinction. Okay. Stakeholders are the people who will be impacted by any given decision that you take in your business. And shareholders are also stakeholders. Stakeholders will be your employees, your customers, government, shareholders, suppliers, everyone. Okay. Now, in a board purpose, they'll not only consider the interest of shareholders, but it is all binding. They will also consider all the stakeholders' interest. Okay. Then comes board responsibilities. Okay. So, board, these are assuming the position of owners of the company. Okay. So, they will be having the oversight responsibilities. Okay. So, now, the ultimate responsibility to make sure that everything is running well in the organization will be with the CEO. Board of directors have this oversight responsibility. That means they will oversee that all the functions are running in the expected manner in the organization. These are the people. Board of directors are the ones who appoint the CEO and they will monitor CEO's activity. Okay, and they oversee the strategy, succession planning, risks and internal controls, and the ethical tone. For everything, oversight responsibility is with board of directors. Then comes interaction. Okay, so For a successful organization, everybody should interact properly with each other. Okay. So when they have proper interaction, they will come to know what is running in the organization. They'll get a better clarity. Okay. That is why I also say interact with me during sessions. Okay. So in interaction, what happens? All the levels of management, that is the lower level, middle level, top level managers, they should be in good interaction. They should know what is happening in the firm. Proper communication should be there. And this is one way. And on the other way, board should have proper interaction with top level management, the external auditors, internal auditors, the legal counselors. With every one of them, they should have this interaction. Only then they'll come to know what is happening in the economic environment, what is happening in the business environment, how can they position their business. So what are the risks that are present? Everything. They'll get a clear idea only through this interaction. Okay. Then comes independence. Okay. Independence in the sense, the job roles, especially the board of directors, the CEO, and all of these people, they should be independent. Especially board of directors, they should have this independence. Independence in the sense, they should not have worked in any job roles priorly in the organization. Okay. They should not be ex-employees or ex-CEO or any ex-C-suite officer of a company. They shouldn't be. Why? Because suppose an ex-employee of the organization becomes the board of director, they will be partial towards employees because they know what it means to be an employee. So that is why independence is required. Then comes expertise and integrity. Okay. Here, directors must have relevant business, industry, company, and governance expertise. So why do we choose them as board of directors? They should have this expertise in every given activity. They should know everything about the business, industry, and company, and also about the governance. Then comes leadership. So in a company, every department has its own leader. And the two most important leaders we speak about is CEO and the board of directors. Okay. And these two job responsibilities should be independent from each other. They shouldn't, a person cannot be a board of director and a CEO. Okay. And these two people, board of director and the CEO, they must be very good leaders because the entire organization follows them. How the BOD is and how CEOs are, that reflects the behavior of others in the organization. Then, committees. So the most important committees will be audit committee, compensation committee, and governance committees. And they must have charters authorized by the board. These are three most important committees. Okay. And charters in the sense, it's like a constitution that each one of them should follow. Okay. Charters in the sense that will contain in detail what are the duties, what are the principles of all these people. And they should abide by the charter that is given to them by board of directors. Then comes meetings and information. So again, this is to have proper communication. If proper communication is not happening, suppose top level management is continuously giving orders to the lower level management. Okay. And lower level management, they just follow whatever top level managers are saying and they never interact with the top level managers. Assume. Okay. Then what happens? The tone at the top doesn't get an idea. What is the practicality of the business? During that situation, business fails. And there is one more thing. When employees are communicating any business problems to the tone at the top and they never get an answer from them, again, there is a problem. So continuous meetings and information exchange should happen. Then comes internal audit. Okay, there are two types of audit, internal audit and external audit. So what happens in this internal audit is, here, internal audit committee we will have to frame. So this internal audit committee is framed from board of directors. Suppose there are 11 board of directors in a firm. All 11 of them can be internal auditors. They can be part of internal audit committee, or at least 3 of them should be a part of internal audit committee. Okay. Now, what is the purpose of this internal audit in the sense? Before external auditors come for audit procedures, internal auditors will verify all the financial information and the documents. If there are any evident errors and corrections, they will correct the financial statements and keep it ready for external auditors. Now there is a chance of getting a approval from our external auditors for our financial statements. Okay. Then comes compensation. Compensation is the pay that we give for the various job roles in the company. So committee carefully considers compensation amount and mix for executives and the directors. Then comes disclosure. Okay. Disclosure in the sense we know about this full disclosure concept that we follow in financial statements. That means any important or material matters that are present, everything needs to be disclosed without hiding any important information. And here you will have to disclose this proxy statements. So what is meant by this proxy in the sense? In the board of directors, they will conduct many meetings and voting procedures. Okay. Suppose I am the board of director who hold 50% of the shares in Infosys company. Okay. And they will give me the dates of board meetings. I should be present there, right? In order to cast my votes. At that point of time, I'm not available. I know I'm not available on that date of meeting. So what can I do? So I can assign this proxy to another person. Another representative of mine can attend the meeting. I will give my proxy votes to them. So they can vote on my behalf. That is proxy statement. And proxy statement, again in detail, they will mention how should a proxy be, how should a proxy representative be, and how many votes they can cast, and how to approve it. Everything will be written in proxy statements. That needs to be disclosed. Then filings and press releases should be transparent and timely. So yeah, audit filings and press release. Every organization, they have to disclose their financial statements. You can check for that matter any given public company's financial reports. It will be available in their websites. Those filings and press releases should be transparent and timely. Then evaluation, annual evaluation of CEO, board committees, full board, and the individual directors, obviously. So, guys, one thing you have to remember is whosoever is in this leadership position, we have to conduct 360-degree evaluation. Okay, a person who is a leader, that person has to be perfect in every way, not only in financial aspects, but in leading their committee or in achieving the group objectives or in the motivational factor, in ethical factor, legal factor, every way they have to be good. So 360-degree evaluation takes place. Okay. So next up, the board of directors and the audit committee. So as of now, you guys are clear. What is audit committee that we are framing? It is nothing but it consists of the board of directors. Okay. So minimum board of directors that can be the part of our audit committee is 3 members. Maximum it can be all the board of directors. Okay. So now board of directors, what are their chief responsibilities? They hire and evaluate CEO performance and they elect other officers as well. C-suite officers, CEO, COO, CFO, all of them, they'll appoint them. Then sets top level strategic objectives and planning. Obviously, strategy will be planned by BOD. They are closely involved with internal control activities. They must be familiar with company activities and environment as well. And then they investigate any issues they consider important. Strategic issues, we call them as strategic issues. Okay. Suppose there is any legal conflict or suppose there is a threat for the company and suppose now the war in the Middle East that impacted food and beverage industry a lot. That will be again a very big issue for them. Board of directors investigated. Okay. Then comes audit committee requirements. Yeah. Minimum 3 members and maximum all independent. Yeah. And the maximum will be all independent board of directors can be part of audit committee. And all the 3 members who are involved, they have to be independent. Independent in the sense they shouldn't be associated with the company's tasks in any job roles priorly. Then the New York Stock Exchange and how we have the Bombay Stock Exchange here, Bombay Stock Exchange, National Stock Exchange in India. In US, we have New York Stock Exchange. And it requires that 5-year cooling off period for former employees. Suppose I am employee of Infosys and later I want to become a board of director. 5 years cooling off period should be there. Okay. Then at least one member is a financial expert. Financial expert in the sense they know completely about all the finances that is taking place. Okay. So they will have the knowledge of financial planning and everything in detail. And such type of a person is financial expert. They will be also eligible for solving any finance related issues as well. Their knowledge will be very vast in finance. Okay. Then comes all members must be financially literate. Everybody should know what finance is at least. Okay. Then comes audit committee responsibilities. Yes. Here, what are the audit committee responsibilities? To select and nominate the external auditor and approve their fees. Okay. So who is an external auditor? I'll give you one example. So TCS once had given their audit services to KPMG. Okay, KPMG was their audit partner for some years. So that is the external auditor. And the internal audit committee will also approve the fees that they are paying for external auditors. Then the supervise and overseeing responsibility will also be there. Okay, supervise and oversee auditor independence and qualifications. Now TCS came to know that KPMG is their audit partner. Now what will they do? Whosoever is the audit partner coming from KPMG, that person should be independent and their qualifications should match. Then review annual or quarterly financial statements and MDA. Okay, so now reviewing the annual and quarterly financial statements, this will be first done by internal audit committee and the management discussion and analysis. MDA is management discussion and analysis. Even that will be reviewed. Later, meet separately with management, internal and external auditors. So this is the task of external auditors. What they do is they meet with the management separately and with the internal auditors separately because they want to know the complete picture of what is happening in a firm. This they will come to know when they meet managers separately and the internal auditors separately. Okay. And then again, this holds true with internal auditors also. Internal auditors will have very good communication with management and the external auditors. Then set hiring policies for former audit employees. Yeah, former audit employees, auditor employees. That means KPMG is the audit firm and whosoever comes from the KPMG, they will be our former audit employees. Hiring policies like how you will appoint a audit partner from KPMG. You will have your own hiring policies. Then address management fraud risk. Okay, there is one more important concept called as internal control over financial reporting, which we will come to know in the following slides. Okay, so that is a biggest management fraud. So the audit committee members must address this fraud before they call external auditors into their company. Okay, and in any given business, there are two types of frauds that we must correct. So first up, it is misrepresentation of financial statements. And that is the fraud which is done by the management of the company. And then misappropriation of assets. It is the fraud done by employees. So these two business frauds, you should always remember both of them. Okay. So misrepresentation of financial statements is a fraud by management. Misappropriation of assets is by employees. Okay. So next up, we have internal controls. Yeah. So what is this internal control? Internal control is our attempt to make sure or to build the activities to prevent and detect any frauds or errors before they are occurring and causing negative impact into our business. Okay. That is the first step that we are taking towards having proper business without any frauds and errors, or at least to prevent them. Okay. Now, how does COSO define this internal control? Okay. So now a process affected by an entity's board of director, management and other personnel designed to provide reasonable assurance that objectives relating to operations, reporting and compliance will be achieved. Okay. Now, what are these operations, reporting, and compliance? And again, one more sentence or word you will have to focus is reasonable assurance. Okay. In spite of having very good and strict internal controls, you will not be able to completely say you will eliminate fraud and error from a business. That's impossible. Okay. You can only give reasonable assurance. You have tried your level best to control the fraud and error. In spite of that, if frauds and errors occur, that is out of your hands. So you will be able to achieve only reasonable assurance through internal controls, not absolute assurance, not 100% assurance. Okay. Then reasonable assurance that objectives relating to operations, reporting and compliance will be achieved. So what is this operations? Operations relate to core business activities. So you will have to ensure effectiveness and efficiency of operations. Then when it comes to reporting, so whenever you are reporting financial statements, it should be transparent, reliable and consistent. Then compliance. Compliance in the sense for a business there will be n number of rules and regulations that is given by that is given. So in US they will be following US GAAP and the conditions given by IRS and Securities Exchange Commission. As in how we follow Companies Act in India, they will have to follow applicable rules and regulations from SEC, the US GAAP, IRS, and so on. Okay. Then internal control, risk and responsibility. Now comes the important picture. Who is responsible for internal control? Again, board of directors will have the oversight. They'll just overview internal control is proper or not. And CEO, the chief executive officer, they will have the ultimate responsibility of making sure internal controls are very well taken place. They are very well established in the organization. The ultimate responsibility is CEO. Suppose board of directors find any deficiencies in internal controls, they will hold CEO responsible for that because that person has ultimate responsibility. And who and all are responsible? Entire organization is responsible for implementing internal control. Okay, so if any one member, one employee is not following internal control properly, and that's a failure of internal control system. That's why everybody is responsible. Ultimate responsibility is with CEO and oversight responsibility is with board of directors. Okay. Now comes the important topic, the 5 components of internal control. You should memorize all these 5 points. Okay. So first up, we have control environment, then risk assessment, then comes control activities, followed by information and communication, and at the end, monitoring activities. So what is this control environment? So this is what we spoke in corporate governance. So you will create all your standards, procedures, rules, and regulations in such a way that is your first step. If you have a good governance, half of your task of setting internal controls is done. That is your control environment. Okay. Standards, processes, and structures that form the foundation for internal control. It sets the tone, includes integrity, ethics, and oversight by board of directors, organizational structure, authority, and the accountability. Okay. So in simple words, if I have to say, good governance is all what you need. Then comes risk assessment. Okay. Now you will be assessing risk. Risk is a part of any given business. Okay. Now you will have to assess what are the type of risk. So risk is one of the major part of your company. You should understand what are the type of risk that you are being affected with. Okay. And what are the measures you can take to avoid these risks. In detail, company will have to analyze all of them. That's risk assessment. Okay. So mainly we will be focusing on 3 types of risks: inherent risk, control risk, and detection risk. Okay. So what is meant by this inherent risk in the sense? I'll give you an example. Okay. So if there is a firecrackers industry, okay, firecrackers company that are manufacturers of firecrackers. So they are having this inherent risk of fire accidents. Okay. So easily their factory can catch up with fire. That is their inherent risk. Why this risk came? Because they are manufacturers of firecrackers. So such risks are called as inherent risk. Okay, risk that is naturally present because of the nature of the activity, that is inherent risk. Then comes control risk. Okay, internal control will not prevent or detect material misstatement effect in a timely manner. That means you have positioned proper internal controls in your firm. Okay, but your internal controls are not so effective that they are able to address frauds and errors. Even though you have tried your best through internal controls are not working well. They are not preventing and detecting the frauds. That is control risk. Okay, then comes detection risk. Okay, so detection risk is if there is any misstatement that occurs in a financial statement, that's natural. Okay, when wherever human beings are involved, mistakes are natural. It can occur. Okay, now if misstatement occurs and if it is not detected by the time external auditors come, so that is detection risk. Then comes control activities. So now we are sure about our control environment and risk assessment. So what are the control activities that we can assume? So the control activities majorly are of two uh, sorts. So first up, you have preventive controls and next you have the detective controls. So what happens in preventive controls? So you will be avoiding the error before it occurs. Okay. So before an error takes place, we will be avoiding it. We will take measures to avoid it. That's preventive. So the major examples will be segregation of duties and job rotation, which we will study in the coming slides. Okay. Then comes detective. Okay. So detective means error has taken place, but it has not met its final objective. Okay. Let me give you an example of this. So you have placed in very good internal controls. Okay. But still there is an employee who steals the inventory from warehouse. Okay. And before employee sells the stolen inventory to a third party, we have caught the employee. That is detection. Fraud has taken place, but employee's ultimate intention was to sell it to third parties and make money. Before he sells, you have found out the corruption that happened and you brought back all the inventories. So that is detection. Okay. Then the fourth the fourth component is information and communication. This is simple. So whenever you gather information about your business from the outside sources, you should make sure that you're getting information properly from recognized resources. And whenever you are communicating information to internal and external users of financial information, you should make sure that it's reliable, relevant, transparent, and accurate. So that is all is said in information and communication. And at the same time, proper communication should take place throughout the organization. Okay. Then comes the monitoring activities. Now you have done your part. So now you have placed in internal controls. From time to time, you will have to check whether internal controls are performing well or not. So that is monitoring activities. And suppose internal controls are not so effective, they are not able to prevent or detect errors. Now you will have to improve those internal activities. After monitoring, you will come to know this defect and you will have to improve the internal controls. Okay, so these are the 5 important components of internal control. Yes, so next up, we have the transaction controls. Okay, so what is a transaction? Suppose I sell goods to my customer, that is a transaction. And if I purchase raw materials from a supplier, that is also a transaction. So like this, there are hundreds of transactions that are taking place in a business. Okay. And each of the transaction, there is a threat of an error or fraud being occurred. Okay. When I'm selling goods to the customer, again, there is a possibility of fraud occurring here that I can sell them 10 products and I can take the money of 2 products for myself. I can make the profits this way. Okay. So in every given transaction, there is a hidden error or fraud like this. To prevent all of them, we need transaction controls. Okay. So for transaction controls, there are some 4 controls that we need to consider. So first up, authorization. Authorization in the sense, for every given department, there will be a authorized person. There will be a department head. who usually will be department managers. For production department, it will be production manager. For sales department, sales manager, and so on. So if any activity is taking place in their specific departments, they have to take the permission from the authorized person. Suppose I want to sell goods, I have to take permission from sales manager. So that is authorization. Then completeness. So all the valid transactions should be included in accounting records. If I'm selling 10 products, all 10 transactions properly should move into accounting records. Then comes accuracy. Transactions should be accurate. They should not be misstated. Then they have to be correctly classified, have to be consistent and timely. Proper recording should happen. Then comes validity. Okay, validity means the recorded transactions have to represent real economic events. Real information should be there and lawful and authorized. Okay, such type of transactions will be valid. They have to be legal, they have to be authorized, and they have to be correctly stated without any misstatements. Those are valid transactions. Then physical safeguards. So for inventories or assets of the company, to prevent them from being stolen, we will have to take some physical safeguard measures. Then comes error handling. So error happens in a firm. That's natural. If an error happens, how are we correcting it? That is important. Okay. How do we notify the errors and how are we correcting that? That is error handling. Then comes the most important concept, which is segregation of duties. Okay. Segregation of duties. So what happens is, in one department, if you are giving whole and sole authority of every task for one person, easily they can cheat us. Okay, that person can buy 10 goods, they can sell 8 products, and 4 products money they can assume, and 4 products money they can give it to the company. Like this, many frauds can take place. For that, segregation of duties is very much important. You should not give all the responsibilities to one person in such a way that a person should not be able to perpetrate and conceal an irregularity. That means person should not be in a position to commit a fraud and to prove that they didn't commit any fraud. Both the responsibilities you shouldn't give for one person. Now, if that is the case, what roles or duties should be segregated? Okay. So now, before entering into segregation of duties, we'll cover up some of the transaction control activities, which are important for understanding segregation of duties. Okay. Now, authorization and approvals. Okay. In authorization and approvals, as we discussed priorly, what happens is any given transaction should happen according to the permission given by the authorized person. Approval we have to get. Then physical controls, equipment, inventory, securities, cash, secured in a locked or guarded areas. Physical securities. Then comes reconciliations. That means if any transaction has taken place, we have to check for its validity, in the sense double verification has to happen. Okay, you might have heard of this bank reconciliations. Okay, bank reconciliations means whenever you enter your receipts or payments, obviously it will occur through your bank payments, right? So all those receipts and payments which you have recorded in your accounting books will be taken and your bank statement will be generated. Okay. Time to time, whatever payments and receipts you have recorded in accounting books will be compared with bank statements. Okay. That is bank reconciliation, double verification. Okay. Then comes verifications. Items compared to each other or to policy. If any mismatch is there, follow-up is required. This majorly takes place in verifying your assets. So in your books, you might, if you have entered some 10,000 inventories and when physical count is taken, only 8,000 inventories are there, means now there is mismatch in the counts. Verification should be done where this 2,000 value of inventories went. So that's verification. Then controls over standing data. So standing data, in the sense there will be some confidential data, confidential files in the organization. Okay. For them, there has to be a proper control so that any unauthorized person doesn't access them. Then comes supervisory controls. So Determine if other transaction controls are performed completely, accurately, and per policy. Supervisory controls means you will verify whether every transaction controls are performed properly or not, if anything is missed. Okay. So now we will be understanding segregation of duties. So in order to prevent a person from both committing an error and covering that error, okay, they have committed the error and they prove themselves that error, they have not done any error or fraud. In order to avoid such happenings, 4 duties have to be segregated. Okay, so they are custody, that is physical custody of asset, record keeping, authorization, and reconciliation. Okay, these 4 duties in any given department should be performed by different persons. So what is meant by physical custody in a department? Let's take production department for that matter. Okay, so in production department, again, raw material should be under the physical custody and finished goods and should be under physical custody, even the work in process inventory. So physical custody of all this inventory in the warehouse should be given for one person. Physical control over assets should be handled by one person, who usually will be warehouse personnel. Then record keeping. And in production department, they will have to record how many raw materials they received and what was the production that took place, what inventories are there. Every record should be there. Journal entries should be there. That should be given to a different person. Then comes authorization. Okay. Authorization will be with the department heads. For production department, it will be with the production department manager. They will have to approve how many goods are to be produced, how many ending inventories should be there. They have to give the approval. Then comes reconciliation. Reconciliation means, again, cross-verifying. So how many, you will take your records that was maintained and you will reconcile. This reconciliation will be done by the 4th person who is not into authorization, record keeping, or custody. The 4th person will compare the physical assets that are present and with the records that are maintained. If any errors are there, it will be communicated to the authorized person. So these 4 duties in any given department should be separate. Okay. If not, then internal controls are very weak. Okay. Then comes physical safeguarding of assets. How do you physically safeguard an asset? This is a very general topic. So first, you'll be having segregation of duties and then physical protection and controlled access to records and documents. Only authorized people will be allowed to access documents. Then restricted access to assets. And then effective supervision. Okay. Now what will be the physical protection over the inventory controls? So locked area with advanced locks and requisitions approved by authorized personnel. So if you need to allow somebody to access any assets or inventories, that person should be authorized. Then gatekeeper monitoring inventory area, security cameras and alarms, and then regular physical inventory counts, investigate any missing items. So these are general physical safeguards that take place. Yes. So next up, our important concept is FCPA, Foreign Corrupt Practices Act. Okay. And FCPA was introduced in the year 1977. And it contains majorly 2 provisions, anti-bribery provision and accounting provision. Yes. So what is the need of FCPA? So what used to happen is in earlier 1950s, especially in the American companies, there were many scandals that took place. Scandals in the sense, there were many business people who had given bribes to foreign company officials to secure their businesses. And when an audit took place stating how much amount of bribes was given, it was counting somewhere around close to $300 million. $300 million worth of bribes was given to foreign officials in order to secure their businesses in foreign countries. Okay. So in order to avoid all such malpractices, FCPA came into existence. So one thing was they were giving bribes. And the other thing was when FCPA anti-bribery provisions came in place, it was mainly intended to avoid this corrupt payments that were flowing out of US to foreign countries. Okay. So FCPA in 1977 enacted in response to disclosures of questionable payments or corrupt payments made by the large companies. So they set two main provisions. In order to avoid the bribes, they set this anti-bribery provision. Okay. So anti-bribery provision prohibits to give, offer, or promise anything of value, which is known as the corrupt payment, to a foreign official, foreign government official to get unfair business advantage. Okay. Suppose you have operations in US. You are a US based person. You should not give any bribes to other foreign officials, such as the government officials or foreign political party in any other country. You shouldn't bribe anybody from India or any other country other than US. Okay. Now, it is applicable to both public and private companies. Then, corrupt payment. What is a corrupt payment? Intended to cause the recipient to misuse official position. That means you have a corrupt intention. You forcefully want to secure your business position in a foreign country. That is your corrupt intent. And the bribe that you're giving for this concern is a corrupt payment. And who is covered? That means now if I am a entrepreneur from US, I should not give any bribes to foreign official, okay, or a foreign political party or an official or any candidate for foreign political office. If you notice carefully, it is only covering foreign political parties. That means from from India or China or Japan or Russia, any other country other than US. Okay, it is not including the domestic political parties. That means political parties within US are not included. Okay, you shouldn't give bribes to foreign officials, foreign political parties, or any other foreign political office holder. You are not supposed to pay bribes for them. It's not covering domestic political parties. Okay, this thing you should give a importance to. Then comes the liability. Suppose a company is caught giving bribes to foreign political parties, then what's the liability they have to face? Entire company will be responsible for that. Okay, entire company will be allotted some fines, and individuals will also be responsible personally. Personally, they will be held liable for their actions. Okay, now what are the exceptions to anti-bribery provisions? So there are some facilitating payments. So what are these facilitating payments? Small payments to foreign officials to expedite routine governmental action. Suppose I'm an US based entrepreneur and I have my operations in India. Okay. And in India, there will be some fast track facilities, right? Suppose I want to get some insurance in a general pathway. It might take a lot of time for me, but there will be some other options like a specific, a fast track pathway. That means if you pay some more amount, you will be getting it done quickly. So such payments are known as facilitating payments for your routine governmental action to get license or permissions or any mail delivery. For that, in order to speed up that process, if you are giving them some facilitating payments, that is not covered under, that is not called as bribe. Okay. Then affirmative defense. Payment was lawful under written laws of the foreign country. Suppose I'm giving a payment to some foreign official in India. Okay. And if it is treated as lawful within India, okay, then US government can't question. Then comes affirmative defense. Payment was a bona fide business expense, travel, meals for demonstration, and so on. So if it is for travel, meals for demonstration, then it should be in a considerable amount. Okay, not in millions together. You should not disguise any bribe payments as for travels, meals, or demonstration in a huge amounts. You should not disguise any bribe as such payments. If you are spending genuinely for travel, meals, for demonstration, then it has to be in a acceptable amount. It should be in a reasonable amount. Okay. Now, anti-bribery provision applies to both public and private companies, and Next up, we have accounting provisions. Now let us understand what accounting provisions are. Okay. So these accounting provisions means, so what used to happen is, even in spite of getting in place the foreign anti-bribery provisions, then what used to happen in businesses, they still continued to pay bribes, but now they started disguising it into accounts. Okay, they started disguising these payments as legal payments in their accounting records. Then, as it was found, then they came into an understanding that so companies are disguising these payments in their accounting records itself. We will have to bring in place accounting provisions as well. Okay. And the purpose was to prevent fraudulent accounting used to disguise bribes as legitimate expenditures. And it applies to public trading companies who are listed under SEC. Okay. So here, in India, if you want to be a public company, you will have to register under the stock exchange, BSE or NSE. So in US, it is called as Securities Exchange Commission. The public companies will have to be listed under SEC, Securities Exchange Commission. And accounting provisions is applicable only to publicly traded companies. Okay. Now, there are two provisions in accounting provisions, books and records provision and internal controls provision. So what is this books and records provision? Securities Exchange Commission issuers must make and keep books, records and accounts that accurately and fairly in reasonable detail reflect transactions and asset dispositions. That means transparency should be there. In detail, all the records and accounts should be said without hiding anything. Then, records must be truthful. Bribery cannot be hidden as a consulting fees or commission. Records must be truthful. Then, accuracy in detail is key. Not precision to the penny, but reasonable detail. Reasonable detailing means material matters, whatever the material matters are there, in detail it has to be disclosed. Then comes the internal controls provision. So we call this as ICFR, internal control over financial reporting. Okay. So again, we came to know that this financial reporting is also, misstatement of financial reports. That is the fraud that management can commit. Okay. In order to avoid that, ICFR should be there, internal controls over financial reporting. Now, internal controls provisions state that companies must devise and maintain internal control system providing reasonable assurance that transactions executed per management authorization, every transaction that you take into consideration, it should be authorized. Then transactions recorded to permit GAAP financial statement preparation and asset accountability. It has to be in accordance with GAAP regulations, and asset accountability should be there. That means whatever asset you are recording in your records should be same when you count them physically also. Then asset access will be permitted only to authorized persons, and then recorded accountability compared with existing assets at reasonable intervals plus action to differences. Suppose, as I told you, inventory controls. So now what happens is inventory that you're recording in your accounting books is a different amount. And when you count them physically, if they are a different amount, difference is there, right? So we will have to find out the reason for this difference. Okay. And if it is proven that some mishap has taken place, again, they will be facing punishments for that. There will be fines or some punishments given for misappropriating the accounts. Okay. So next up, yes. So next important concept is about Sarbanes-Oxley Act. Okay. Sarbanes-Oxley Act was introduced in the year 2002. Okay. And now Sarbanes-Oxley Act totally has 4 titles. So we will have to understand each title. Yes. So Sarbanes-Oxley Act first title is PCAOB, which is Public Company Accounting Oversight Board. So Sarbanes-Oxley 2002 is applicable. Who is it applicable to? So first, it is applicable to US based publicly held companies. That means proper public companies in US, which is registered under SEC, Securities Exchange Commission. Then non-US publicly held but operating in US. Suppose I'm an Indian, okay? So I'm an Indian and I've started my business in US. It's non-public, non-US, publicly held. And yeah, as an Indian, I am opening my branch in US as a public company. Exact example is Infosys. Okay, they have their public company in US. They will be covered under SOX Act, Sarbanes-Oxley Act. Then some provisions will be applicable to private entities as well. Yes. Now we'll understand Title 1 of Sarbanes-Oxley Act, which is PCAOB, Public Company Accounting Oversight Board. So what is the responsibility of PCAOB? So their first responsibility is to register public accounting firms that audit public companies. Okay, so they exclusively focus and give more importance on auditing. Because in audit itself, you will come to know the fairness of financial statements. Now, first responsibility is to register public accounting firms that audit the public companies. Then, establish auditing, attestation, quality control, ethics, independence, and other standards for audit reports. Okay, you have to properly establish all these standards for audit reports. If you expect audit reports to be follow proper format and to be accurate, then you will have to give some rules and regulations to follow, right? So that is what PCAOB establishes. Then conduct inspections of registered firms annually for firms that regularly provide audit reports. Later, enforce compliance with SOX. For all the public companies, they will enforce them that they should follow SOX and the board rules and laws relating to audit reports. Then, conduct investigations and disciplinary proceedings and impose appropriate sanctions for violations. If you find out any public company violating Sarbanes-Oxley Act, for their violation, you will have to impose fines on them. Then manage operations and staff of the board. So all these 6 responsibilities, you should know it very clearly. All of them are the important responsibilities of PCAOB. Then what is the purpose of PCAOB? It is to oversee auditing of public companies and to protect investor interests and enhance the public confidence in independent audit reports. So their main job is ensuring good auditing is taking place in public companies. Then why are they worrying so much about public companies? Because public investors have invested their funds there. So in order to protect their interests, it is important for them to audit the public companies properly, to oversee auditing of public companies. Yes. So next up, we have Title 2, which is about the auditor independence. Auditor independence, this concept we already knew. Okay, so Section 201 states certain services are prohibited for auditors. So what are they? So auditors, their main job is to perform proper audit of the company, external audit of the company, and give prompt reports. That is all what they are responsible for. They should not involve in any bookkeeping activities, managing activities, or other services of the firm. Okay, they have to maintain independence. They should be completely independent from the firm's practices. Then comes Section 203, which is audit partner rotation. Audit partner rotation means, the lead audit partner, review audit partner must not provide services for 5 previous fiscal years. That means I gave you an example of TCS and KPMG. So KPMG was one of the audit firm chosen by TCS. Okay. Now, audit partner rotation in the sense 5 years, if they choose a lead audit partner, that is KPMG, and the review audit partner, they should make sure that for 5 previous years, they should not have been in place for auditing this company. Okay. Then Section 204. Auditor reports to audit committees must include all critical accounting policies, practices, and material information. Okay. So here in auditor reports to audit committees, now when external audit partners come to us and report everything, okay, then what happens? When they are giving us the reports, they should give us prompt reports, all accounting policies, practices, and material information, whatever they found from us. So these are mentioned in Title 2. Next up, moving on with Title 3, which is about the corporate responsibility, and it is mentioned in Section 302. Here, CEO and CFO must certify each 10K, that is annual reports, and 10Q, quarterly reports, filed with SEC. So why is this required? So now what happens is their annual and quarterly statements, when a company is giving, okay, when company is disclosing their annual and quarterly reports, how can a person believe or how can a person trust it? So only when the C-suite officers, CEO and CFO, when they certify that the annual reports and the quarterly reports that they are submitting, it is accurate, then public will have trust on that. And again, that will give Securities Exchange Commission a proper stake. They will now come to know whom to hold responsible for. If statements are not accurately given, they will again go and hold responsible CEO and CFO. CEO and CFO will be questionable. Okay. Now, certifications should confirm that no untrue material statements or omissions and financials present fairly in all material respects. Internal controls are designed and evaluated within last 90 days. So these are the things that CEO and CFO must certify. Okay. Then Section 302 states what officers must certify. What should they certify? Okay. Now, they are responsible for establishing and maintaining internal controls. The CEO and CFO, they are responsible for establishing and maintaining proper internal control and designed internal control to be aware of any material information. Of all the material information to know about it, they will have designed this internal control. Then, evaluated internal control effectiveness within previous 90 days. Presented conclusions in the report. That means ICFR, Internal Control over Financial Reporting, it should be updated. 90 days once, they will have to review it. Then, disclose to auditors and audit committee all significant deficiencies and any fraud. Okay. Then comes stated whether significant changes in internal control occurred after evaluation date. Okay. These are the main responsibilities of the key officers, CEO and CFO. Yes. Next comes our important title number 4. So here we have the sections 404 and 407. Here, section 404, what happens? It is about management's assessment of internal control over financial reporting. Okay. And here we have 404A, 404B, and 404C. So 404A, what it says, annual report must state management's responsibility for establishing and maintaining adequate internal control structure for financial reporting and include management's assessment of ICFR adequacy. Okay, that means now we came to know management's assessment is required, right, for internal control over financial reporting. So earlier we studied that if there is any misappropriation of or misstatement of the financial reports, management is the one who is held responsible. Okay. Now, that is why we will take management's assessment regarding internal control over financial reporting. Now, 404A says that annual report must contain management's responsibility for establishing and maintaining adequate internal control structure for financial reporting and include management's assessment of ICFR adequacy. Management should completely take this responsibility of internal control over financial reporting. Then 404B, here it states company's independent auditor must report on or attest to management's assessment of ICFR effectiveness. Okay, here the independent auditor, what do they have to do? Whatever management has prepared and attested, right? Financial statements, For that, this is like double attestation. Management is already attesting. This is like a double attestation when internal auditors as well attest to their effectiveness. Now, section 404C gives us a provision. So, it states that section 404B doesn't apply to non-accelerated filers. So now, who are these non-accelerated filers? So in US, based on the public capital that companies generate, they are divided into non-accelerated, accelerated, and large accelerated. Okay. If they are non-accelerated, that means this company is having a capital which is lesser than 75 million. Okay. So if they are non-accelerated, section 400B is not applicable to them. If they are accelerated, holding anywhere from 75 million to 700 million, they will be covered under 404B. And even if they are large accelerated, if their capital is greater than or equal to 700 million, again they will be covered under 404B. Okay, you will have to remember how to classify the accelerated and non-accelerated filers. Less than 75 million, non-accelerated. 75 to 700, accelerated. Less than 700, sorry, more than 700, large accelerated. And non-accelerated are not covered under 404B. You can expect theory MCQ questions from this. You should know these all the four titles very well. And according to these sections, you should know what are the included topics and which companies are excluded. Okay. Now comes section 407, which is about audit committee financial expert. Okay. So what audit committee financial expert, what it covers is at least one audit committee member should be a financial expert. And they have to disclose who is that financial expert. Okay. Followed by all the members of the audit committee should be financial literates. This is what section 407 says. Yeah. An important distinction is you will get a proper confusion. You might get a common confusion between 404A and 404B. 404A is about management's attestation. That means whoever is preparing the financial accounts, that person should attest, manager should attest, and auditor should attest for management's attestation, stating that that's a dual attestation. Okay. They'll say whatever management has found out and told is correct. That is auditor's attestation. Okay. Yes. So is everybody clear till the Sarbanes-Oxley Act? Any doubts? All six of you? Okay. What remaining students? Kavita, Nikhil, Shravya, Sushmita, and Vishruta. All of you are understanding? Okay, guys. So next up, our next concept is external audit opinions. Till now, we came across how internal audit takes place, how corporate governance works, what is internal control, what is segregation of duties, and also what are the rules and regulations we have to follow as per FCPA and SOX. Now we will focus on external audit opinions. After following all of this, what is the opinion we get from the external auditors? Okay. So external auditors, whenever you prepare your financial statements, and if it is not signed or attested by external auditor, your financial statement is invalid. Okay. None of the investors will consider your financial data as correct. So if auditors don't sign on your financial statements doesn't contain any value. Now, how do the external auditors evaluate? So, according to the external auditors, transparent disclosure should be there and compliance should be there for all the applicable rules and regulations. The financial statements should be compliant for all of that. And none of the disclosures should miss. None of the material misstatements should be there. Errors and frauds shouldn't be there. So, if a financial statement is complying with all these requirements, then external auditors will give a unqualified or unmodified opinion. Okay. So unqualified and unmodified opinion is the highest level of positive opinion which is given by the external auditors. Okay. Financials present fairly in all material respects, the position, the income, and the cash flows of the company. Then it has to confirm with applicable framework. It's a clean report. Okay, if you get unqualified or unmodified opinion from them, that means it's a clean report. Okay, and PCAOB calls it as unqualified and Accounting Standards Board calls it as unmodified. You better know both the words. Then comes qualified or modified opinion. Okay, so when do we get this qualified or modified opinion? In the sense, suppose you have prepared your financial statements and most of it is correct. But external auditors are not getting that confidence to give an unqualified opinion because they feel that some point is missing, which is holding them back from giving unqualified opinion. Okay, then they'll give you qualified or modified opinion. And if you notify what error has taken place and if you correct it, they might upgrade it to unqualified opinion. Okay, it contains an exception in some respect. Financials do not present fairly. That means 99% they will be fair. That 1% will be missing, for which external auditors will not be satisfied. And they'll give you modified opinion. Then it is used when issue is material but not pervasive. Yes. Then comes adverse opinion. So adverse opinion means it will be very evident that the company's financials are not in conformance with US GAAP. As you look at it, it will be very evident. Okay. At that point of time, as they are not in compliant with US GAAP itself, how can we give them good opinion? At that point of time, adverse opinion is given. Okay. Then disclaimer of opinion. Auditor has not been able to gather enough information to express an opinion. So, scope limitation so severe and no opinion issued. That means, as you look at the financial statements, it will be very evident to you that most of the information is hidden. It's not disclosed properly. At that point of time, when information is hidden, how can we give our opinion properly? So, at that point of time, we will be mentioning it as a disclaimer of opinion. Okay, and critical audit matter. So critical audit matter is when external auditors are auditing financial statements, whatever matter they found very significant. Okay, that is critical audit matter. Communicated to audit committee, it relates to the material accounts and involves challenging, subjective or complex auditor judgment. Okay. So the highest opinion we can get is unqualified opinion, and the worst opinion from auditors can be this disclaimer of opinion. Yes. Next up, auditors' opinion should also include internal control opinion on ICFR, internal control over financial reporting, and going concern opinion. Both of them are required. Now let's understand what are they. So internal control opinion means, so it will be required for accelerated and large accelerated filers. People who have capital of equal to or greater than 75 million. Okay. For them, internal control opinion is required according to your Sarbanes-Oxley Act 404C. Now, it is top down, and it is a risk-based approach. That means auditors, they will first view in the top management's perspective. They will first view the financial statements. Okay. Then they will percolate to the downwards. That means first will be financial statement level. They will notice the internal control over the financial statements first. overall risks they will come to know. Then they will reach downwards to the entity level. Okay, here any significant accounts or disclosures they will be viewing. Then integrated audit, that means ICFR audit integrated with financial statement audit. Yeah, so the earlier one which we came across, the 4 audit opinions. So that is about the financial statement audit. Along with that, ICFR should be there. And then comes the going concern opinion. Okay, so what is meant by going concern? It is nothing but the belief that the company will continue to exist for a substantial period of time, for a foreseeable future. That is going concern opinion. Now, regarding going concern opinion, auditors, they will be very well experienced. Okay, whenever they look through the financial statements, they will come to know whether this company will exist for the future period or not. Easily they will come to know by looking at asset position and the liabilities position. Okay, at that point of time, auditors will have to give opinion on the going concern ability of the firm. Okay, why is it important? Because there will be many investors who trust that this company will exist for the upcoming years and they will invest. What if that company doesn't exist? So investors' money will be wasted. That is why going concern opinion is given. Okay, here it is triggered when substantial doubt about company's ability to continue as a going concern exists. Suppose a company is facing losses, operating losses for past 3 years, nobody will get a trust that coming year they will exist. Okay, and even their exceptions are there. Okay, auditors, even though they see losses for previous years, they'll consider an opinion from management. They will ask them, so as a manager and as a company, how you are planning to eliminate these losses? How are you planning to improve your business? If they find the management's idea productive and practically achievable, there are chances that they might give good going concern opinion. Okay, or else not. They won't give. Next up, we have reviews and compilations. Reviews and compilations are not so important. The main thing that you should focus on is the complete audit. Okay, complete audit or full audit is very important. Review and compilation, just know about it. So what is this review and compilation? So what happens is the accountants, they'll be getting the data from the company. Okay, when they get that data, they will be given 2 tasks. Okay, first is compilation, then is review. Okay, now what happens? I'll give all the messy data of my company, all the scribbled type of data, which is when an outsider looks at it, they'll not understand anything from the data. Such data I'll give to accountant and I will ask them, just reconcile it and just update it as in how it is applicable to US GAAP. Just reframe and rearrange these statements so that it is acceptable under US GAAP. Okay, that is compilation. Then I'll ask the accountant stating that please arrange the this scribbled data in such a way that at least reasonable assurance is there from it. Okay, that is called as review. Both of them is not of that significant assurance for us. Okay, just an additional services that we can get from them. So here the procedures in full audit, extensive testing will be there. Complete audit. Then in review, high level inquiry and analytical procedures only. And in the compilation, no procedures, just you will format it according to US GAAP. Then internal control evaluation for full audit, it is essential. And assurance that you are getting, it is a positive assurance from full audit, negative assurance from review, and no assurance from compilation. Okay. So this is about our external audit. Yeah. Okay, guys. So now we'll take a break for 10 minutes. Okay, we'll take a break for 15 minutes and we'll be starting again from 5:50. Hello students, are you all back? Shall we continue? Yes. So the next topic is about internet security and cybercrime. So in this era where we depend mostly on the technology and the softwares to store all our data, it is important to know about the internet security and the cybercrime that is taking place. Yes. Now, what are the types of impacts that are software data or whatever data we have on our computer systems might face? Okay. So first, three important malware types that we need to study is about the virus, trojan, and the worm. Okay. So what is this virus? Just a minute, guys. Yes. So these three malware types we need to know clearly about. So virus. Virus is a type of the malicious program software. Okay. So now what happens is this malicious program, it can enter a computer system through the infected hard disks that we insert. It can enter through a pen drive or a CD or a DVD or any such devices which you are inserting, and this device is already infected with a virus. Okay, it requires a host file to enter and get executed itself in a computer system. Now let us say you have inserted a infected pen drive into your laptop. Now what happens? Here, this virus, it will depend on a host for executing itself. It will enter through a file and it will enter into some of your applications and it will start deleting the files or damaging the programs. Okay, so it will have a very negative impact on our computer systems. It will impact their performing and you lose most of your data. So this virus, it doesn't have any malicious intent, but it will negatively impact the computer system of a user. Okay, it will harm their usage, but no malicious intent will be there behind the virus. It just disturbs our computer systems. Now it executes itself. So these characteristics you should be knowing very well. Virus will execute itself. That means it doesn't need a user to execute the virus programs. It is self-executing. Then it replicates itself. From one file to another, it will replicate itself. Then it does need a host file. It needs a file to execute and replicate itself. And key danger, it damages or destroys the data. Next up, we'll study about worm before studying about Trojan horse. So this worm, again, it replicates from system to system without host file and spreads itself throughout the network. And how does a worm enter into a computer system? Suppose one of my friends is sharing an Excel document to me. Okay, and their Excel document consists of this worm. Okay, and this worm, through that Excel document, it enters into my system. So before a worm enters into a system, it will check for any backdoors. It will check for any key areas which doesn't have proper control. If my computer system, it doesn't have some safety controls or antivirus programs or proper security is not there, it will be easy for worms to enter into a computer system. Now once it enters, it replicates itself from system to system. whenever if I share this infected Excel document to some other person, and if they download it, again, the same impact in their computer system. Okay. Now it executes itself. That means if it is present in an Excel document, it will execute itself. It will reach other documents as well. And then it replicates itself without a host file. It doesn't need any file. Suppose, for example, virus needs a file. It will impact one of your files, and from that file it will replicate. Worm, it will replicate itself independently without needing any host file. Okay. Then key danger, network congestion and rapid spread. That means it spreads very quickly when compared to a virus, and network congestion is there. So the performance of your computer and network connectivity will be harmed. Then Trojan horse. Okay. So Trojan horse is based on a story. Okay. In ancient stories, there is one story where there were two kingdoms, and in one kingdom, the king had given so much importance to the defensive system that the defensive system was so strong that the other kingdom which wanted to invade on kingdom A, they were not able to enter their kingdom also. Defensive system was so strong. Then the kingdom B, who wanted to invade, they found out an idea. They thought they will gift something to kingdom A, and they designed a massive, very tall and large horse, wooden horse, and they sent it as a gift. So if somebody gives us a gift, we will accept it, right? How will we doubt them? We'll be accepting it. So the same way Kingdom A accepted it, and inside this wooden horse, there were so many soldiers who then entered into the kingdom and invaded. Okay, this is the same story what happens to computer system. Suppose there is one meme or an anime that is coming into my computer system, or there will be an important, let us say, a job description. Right now, you'll be searching for jobs, right? So you will be waiting to get a job description, and if you get it, you will be curious to open it. Okay, like that, they will just disguise themselves as useful files for us, useful content for us. Okay, then once we click on the content, then it will start replicating. Then the Trojan horse will spread. It's again a virus. Okay, it's a malicious program. If I click on the content, then program starts executing. So it will disguise itself as a very good content for us, and if we click that, virus will spread. So that is Trojan horse. Okay, and it executes itself, and it doesn't replicate itself, and it needs a host file. And how does it get enacted? That means only when you click on that data, it will execute itself. If you don't touch that content, then it doesn't replicate in your computer system. And once a Trojan horse is present in a system, it will open a system backdoor. Okay. So once it is opening up system backdoor, your computer system, frequently it will face such virus attacks. Okay. Now, next concept is about virus hoax. So virus hoax is a email claiming a system file is a virus. So that means what happens is in your email, you will get a message stating that in your computer system, one of the file is infected with virus. That is the message you will get. Okay. And it will ask you to delete that file on your laptop or your computer. Okay. Once you delete that file or the application, whatever it is, then the virus, it will be easy for the virus to infect your system. This virus hoax, it is saying you that virus is infected to one of your files that is protecting your device from virus. And once you delete it, it will be easy for virus attacks. So that is virus hoax. Okay. Then what are the ways in which we can protect our system? It is through antivirus softwares. Okay. So antivirus softwares in the sense, so you will be installing some program softwares that detects any virus in your system, and it will eliminate these viruses. That will not let the viruses to impact your system. That is antivirus softwares. So it recognizes and incapacitates the virus. Then Trojan horses and worms. Yeah, both virus, Trojan horse and worms, for all of them, your one defense system will be antivirus. Then Internet security. Okay. So in internet security, when it comes, electronic eavesdropping. Okay. So recently this electronics eavesdropping, you could find it from iPhone. Okay. So iPhone, many people trust it because their data is very well secured and encrypted. That is the reason most of them bought iPhone. But what iPhone did, it was listening to each and every conversation which people used to do through their software. That is eavesdropping. Okay, so that's a crime which iPhone company did. Okay, so it's not safe for any of the customers when their data is being taken by the company itself who gave them the phone. So that was the practice of iPhone recently, and then they were uh, a case was filed and then they corrected it. So that's electronic eavesdropping. Then user account management. So it is advisable to everybody to constantly keep changing once in 6 months or once in 3 months, to constantly change their account passwords and phone passwords or their important passwords, so that it will be difficult for people to access or to access their key data. Okay, that is user account management. Then firewall. Okay, so what is this firewall? So firewall, it acts as a very good gateway for the data to enter our system. Okay, so what happens with the firewall? So firewall can either be a hardware, it can be installed as a hardware to your computer system, or it can be installed as a software. If firewall is present, what happens is it will scan the data. It will scan the type of data signal that wants to enter your computer system. If it finds that it's a unauthorized data or unauthorized signal, it doesn't let such data to enter your computer system. So that is a very good defense system for us, firewall. Then antivirus we came to know. Then comes encryption. Okay. So encryption in the sense, it will convert data into code. Okay. Suppose in WhatsApp, all the messages are encrypted. Okay. So what is this encryption? So suppose I am sending a message in the CMA USA Part 1 group, let us see. Okay. So when I send the message from my computer, if once the message starts reaching your computer system in the way, it becomes encrypted. It will turn into codes. Okay. Any person in the middle, if they want to access the data that I sent, okay, they won't be able. They will be able to access the data, but they won't be able to understand anything because it will be in a code. Once it reaches the recipient, okay, then it becomes decoded. That is encryption. Okay. So next up, so what are the cybercrime types and cyber criminals tools? So what are the cybercrime types? We'll understand. Copyright infringement. That means, let us say, for example, there is a person who has prepared their own musical notes, okay, and they have copyrighted their musical notes. If I copy their musical notes and I follow that, okay, that's without their permission. That is copyright infringement. Stealing others' work and following it without their permission. That is copyright infringement. Then denial of service. So what is this denial of service in the sense? Suppose we'll take, for example, our IMA portal. Okay, in IMA, we will all book our exams, right? So now what happens is, what is this denial of service in the sense? Assume there is a person with a malicious intent. They don't want any CMA students to book their exams. Assume. So now what they do, they'll create a program so that it will continuously keep the IMA's website busy. Okay, so IMA's website and all, they will have some limits of people who can access the website at a time. Let us say it is 1 million students can access IMA website at a time. Okay, that's its maximum capacity. Instagram and all, it will have a lot of capacity. Millions together people can access it at a time. Okay, their systems and softwares are they have the larger capacity. But usually these exam websites, they will have minimum capacity, which will be 1 million students or something like that. Okay. Now what happens? I will create a program so that the program will reach this 1 million access to this IMA's website. Okay. Now, when maximum access is already there in the IMA's website, then what happens? You will get server busy, website busy, can't access now. Okay, that is denial of service. Most of the students had faced this from IMA's website while viewing their results. Their results went in queue. Okay, they had to wait for 24 hours. Some of them, they waited for 2 days to receive their results. So that is an example of denial of service. Maximum limit will be reached. You will have to wait until the count comes down. That is denial of service. Then comes phishing. Okay, so what is this phishing? So in this phishing, what happens is it's a spam email deceiving users to reveal credit card, SSN, or passwords. Okay, so now what happens in phishing is I will receive an email from my bank. So it's not an email from my bank actually. The email will be like exactly it will be like the email that I received from my bank. Okay, and it asks for my credit card details and my passwords. So what will I think? I think that it's an email from bank itself, and I will send all of those things. And once I send, my accounts get hacked. That is phishing. It's a high-tech scam. They will exactly design email like as if it is coming from your own bank. Okay, that's phishing. Then keylogger. This keylogger, whenever you type something on your keyboard, your keystrokes will be counted. Whichever keystroke you are pressing, that will be recorded. Okay. And if you are entering your passwords and all, the keys will be recorded. And the hacker, they will come to know which keys you are pressing and they will decode your password. That is keylogger. Okay. Then comes tech support scam like fake warning pop-ups, victim calls from the toll-free number, and hacker downloads remote control tools, all of them. So you most of us have faced this, right? Fake warning pop-ups and the links, and then the victim calls and all of that. That is tech support scam. Then intrusion and personal information theft, including the emails. Suppose your password is not so strong. This personal info theft is common. Then comes cyber criminals tools. Here what happens? Port scanners. So here probe service for open ports and creates a backdoor access. So what happens in the port scanners in the sense if your computer system doesn't have proper softwares for controlling, doesn't have proper control softwares, then it will it's easy to find out the backdoor because no proper system controls are there. Easily we can create a backdoor and gain an access into the computer system. That is port scanners. Then comes sniffers. Okay, so this is a problem in a network where computers are not switched. Okay, what is meant by the switch of this computer in the sense? Suppose there are 10 computers in one company. Okay, and there will be one main computer system which will be sending data to all the computer systems. Okay, in this main computer system, there should be a switch. Switch in the sense for which computer I am sending the data. That address will be located in the switch and only for that particular computer, the data will be going. Suppose switch is not there, then what happens? The data that I send, it will flow through all the other 10 computers. Okay. Now what happens? If data is not switched, if computers are not switched, then what happens? If a person enters, if a person to grab all the traffic that is flowing through all the computers systems, they will install sniffers. So what are these sniffers? So sniffer is a notification. It comes as a notification. Okay. Now in this notification, what it asks me, it will say that it's a very important message for you coming from the main computer system. Please click on this. If I click on this, that particular message, all the traffic that is flowing from the main computer, that person will be able to track it. That is sniffers. Then password crackers. So there are many applications to crack the passwords. If passwords are not strong, easily they will be cracked. Then comes logic bombs. Okay. And in this password crackers, guys, so many people's accounts got hacked. Bank accounts got hacked. You know why? most of them had kept very easy passwords 1, 2, 3, 4, 5, 6. And for most of them, it will be either their Aadhaar number or date of birth without any special characters. So, passwords were easily for most of the population, okay, in a country, easily passwords can be cracked because they don't create strong password. And for most of them, whatever password they have for their lock screen in the mobile, same thing will be there as a password for every application. Okay, so such uh, mistakes shouldn't be done. Every time when we set a password, it should be a strong password containing special characters, and then passwords should be changed frequently. Then comes logic bombs. Okay, what is this logic bomb in the sense? It's a program. Okay, it's a program that is designed. Okay, and it enters into your computer system. Even if it enters into your computer system, there is no harm from it unless and until you start running that program. So this logic bomb, it will be inserted as a program. Okay, if certain condition is met, if you click on certain keys, only then it gets activated and it will collect data from your computer system. Then buffer overflow. Okay, now I want to hack the computer system, okay, of a key person in the company. What will I do? I will send them 1,000 emails at a time. Okay, then what happens? There is so much of information overflow which can't be tolerated by that system. Then that system crashes. Okay, once that system crashes, I will be easily hacking that computer system. That is buffer overflow. Then social engineering. Okay, social engineering is so if I want to get details of Infosys, what I will do is I will disguise myself as one of the employees or one of the managers of Infosys. And I will meet a person and I'll disguise myself as the manager or somebody and I'll collect all important data from that person. And that important data I will use for hacking the important information of Infosys. That is social engineering. Okay. Then dumpster diving. Suppose Infosys is deleting a lot of files and they are throwing away their trash documents. So if we surf through this trash documents, you'll be getting some of the passwords or some of the information using which you can hack their systems. That is dumpster diving. Okay. So next up, what are the defenses against the cybercrime? And encryption, we came to know. Encryption is a very good defense system. Once the data moves from the sender, it gets encrypted. And only when it reaches the receiver, it gets decrypted. That's a very good defense system. Then what are the other defense systems we have? Again, firewall. Firewall, it's a very good gatekeeper of a computer system. It's present in both physical form and the software form. So it acts as a very good gatekeeper for a computer system. Now, in a firewall, what happens? It will not let any unauthorized data signals to flow into the computer system. That is firewall protection. Then you have proxy server. So what happens in a proxy server? Yeah. So it's a proxy server. What happens is, suppose when you find that firewall, yeah, when a unauthorized data enters into firewall, firewall doesn't let that data enter into the computer system. Suppose if you find that dual protection should be there, proxy server can also be installed. So what happens to this proxy server is it also acts as a gateway. Okay, it will also attempt to filter out the signals. Okay, and unauthorized signals it will not let inside. Suppose that unauthorized person is willing to crack through this gateway. Okay, then what happens to your proxy server? Proxy server crashes. Then you will get a signal stating that unauthorized person is trying to enter into your computer system. And once the proxy server crashes, your computer system again it will be protected from firewall. Okay, this is a second safety measure for whichever you are taking. Okay, that is proxy server. Then anti-sniffers. Okay, anti-sniffers means you'll just install them as programs. Okay, then what happens if any sniffer is entering into your system? automatically your network interface card goes into promiscuous mode. Once it is in, once you, your system is in promiscuous mode, you will come to know that sniffer attack has taken place. Okay, that is anti-sniffers. Then antivirus, we know that it's a program or a software, okay, which you will install and which protects your computer system from virus, worms, or Trojan horse. That's antivirus. Then we have the encryption methods. Encryption, it converts data into code. Okay, now how to encrypt the data? There are two options: secret key encryption, public key, and private key encryption. Okay, now what happens in the secret key encryption? In the sense, here for encrypting the data, you will find out a different algorithm. You will find out a different key for each of the encryption. Okay, each sender recipient pair has one single key for both encryption and decryption. And now what happens if there are million senders and receivers, you have to create millions of keys, secret keys. So how is it possible? It will be very difficult, right? So practically it is not possible for secret key encryption. Suppose the number of senders and receivers are very less, you can go through secret key encryption. Then the most practically used is public key and private key encryption. So what happens here? So there will be one private key, okay, and there will be n number of public keys. Public keys will be available for all the senders of data, okay, and one recipient, and there will be the private key with the recipient. All the data which people are sending, that will be decoded by the person who has this private key. It will not be disclosed to anybody else. Okay, so here each entity publishes a public key for encrypting data, while keeping the private key only means to decrypt with itself. It's used mostly on internet. For example, your WhatsApp or your Instagram and many other such applications, public key, private key encryption is there. Okay, so this completes our internet security. Next up, we have business continuity and disaster recovery. So what is this business continuity planning and disaster recovery? So suppose your business is located in a place which is mostly prone to natural disasters. Okay, Japan is one of the very best example for this. They don't know when natural disasters will harm their businesses and their houses. Okay, so that is the threat we have from the natural disasters. Now, when the natural disasters harm your business, you can't stop your business there, isn't it? You should have some backup plan. You should have some of your business operations ready in the other site, which is not impacted by the natural disasters, so that once your main business is harmed, you will continue your business in another safe site. Okay, that is business continuity planning. So it's a process of creating and maintaining a plan of recovery after natural disaster, the cyber attack, or other business threatening risks. The transaction log. Okay, transaction log is one of the first thing that you will recover is your operating system, and next thing will be your transaction log. So stores copies from all transaction data, backups stored at secure remote location, and operating system will be backed up first, and electronic vaulting takes place. That means transmitting the backup data electronically to your backup site. Okay, now there are four such sites which you can choose from. First one is hot site. Suppose in location A, you have the threat of natural disasters. What you do is, you will start one more business plan or business accomplishment or all the infrastructure that you need in another safe location. So in that another business infrastructure that you have created in another safe location, it just acts like the replica of your business transaction, business practices that are taking place. Okay, now what happens? The other site will be fully operational backup facility, and it will have a computer system and the live data tracking site. Okay, and current live data will be replicated in real time into that hot site, whichever you created. Then immediately, all the data will be immediately available to continue your business. That is hot site. And it's the best and most expensive one as well. Suppose you don't need a hot site, you can move to a warm site. In warm site, what happens? There will be a computer equipment and a data link installed. Okay. You will be able to get all the data except your live data in your warm site. Okay. Then cold site. Cold site is the cheapest and the slowest one. Here, the space, electric power, the heating and air conditioning, whatever the physical conditions that you need, that will be there in the cold site. But no computer system and no data links, no live tracking of data will be there in cold site. So if a disaster takes place, you will have to purchase your computer system and take the data links installed, and then you will have to continue your business in cold site. Nothing will be ready. Then comes a mobile site. Suppose you don't want to maintain any site of your own, then you will outsource this responsibility to a third party. Now, what you will ask the third party, you can choose any of the sites if you want hot site, warm site, or cold site. So the third party entity, they will have this mobile site. It is disaster recovery system on wheels. Suppose a disaster hits your business now, the next moment, the mobile site will be available for your rescue, for the rescue of your business. Okay. Then comes grandparent, parent, and child processing systems. So this is the order in which data and data files are stored in the company. So child processing in the sense, the newest data will be stored in data files. And in the parent processing in the sense, data up to 1 or 2 years, it will be stored in the files. And in the grandparent, what happens is the new from oldest data till newest data, all the data will be there in grandparent files. Okay, so you can use that for backup to protect the data before or during or after processing. Then uninterrupted power supply. UPS stands for uninterrupted power supply. Here what happens if a power failure takes place? Okay, quickly the UPS services will give you the quick power so that you will not lose your data. Then fault tolerant and redundant hardware take over on failure. So these are the hardware systems that help you continue your businesses at times of power failures. Okay, so this is how business continuity plans will be made. So next up, we have the last topic of section E, which is about system controls. Okay, so right now we discussed that a lot of information will be stored in our systems. Okay, so we depend on a lot of software for storing our systems. For storing our information, we depend on a lot of software systems. Now, we need system controls for that. Okay. What are the system controls that we can expect? So they are the general controls, the application controls. Okay. These are the two sets of system controls we can expect. Okay. So we shall discuss about the general controls and the application controls. So general controls, as the name itself says, these are general for all the system components, processes, and data in a systems environment. That means in a business, how many types of systems you're using. General controls will be same for all of them. Okay. So general controls are of 3 types. First up, we have organization and operation of computer facilities. So here we have the administrative controls, which is segregation of duties. We know this already. Then the administrative controls, which is for supervision of control procedures. So whenever internal controls are in place, supervision of them is also important. Okay, we need to supervise whether internal controls are practiced in a firm or not. That is supervisory controls. Okay, then general operating procedures. So these are written and approved policies and procedures that we need to follow whenever we are performing any activity related to these systems. Whenever we are performing any of the activities, we will have to abide by this general operating procedures. Next comes our software, hardware, and access controls. Okay. And then our data security controls and the file security controls. All of them are the general controls that we follow. Next up, we also have application controls. Okay. These are specific to individual applications, whatever you are using. It will be very specific to the department-wise applications. Okay. Now, it mainly consists of input controls, processing controls, and output controls. Okay. So first, we will look into the general controls, how information technology, IT sector, segregates their duties. So these segregation of duties are very important. Yeah. So first up, we have the system analysts. Who are the system analysts? These are the people who review the current system needs. Suppose now you follow somewhere around, I'll give you an example, Windows 11. Okay. You need to upgrade the system. System analysts are the persons who will view what is the current system that we are using and what are the design specifications that we need for the new systems and how do we upgrade it. This plan will be done by system analysts. They'll give the idea to the programmers how the system needs to be developed, new system, how it has to be developed, how to upgrade this Windows 11 into the next immediate version. They'll give an idea to programmers. Now, programmers, they will take the idea from system analysts. They'll write, test, and document the systems. These people can modify the programs and controls to update our systems. They will be modifying how systems will be updated. All of these we are speaking about now is about the software. And any software changes that we make, it is through programs. Okay. Now they can modify programs and controls, and they should not have access to computers used for actual processing. Just the program they can design and modify. When it comes to program execution, it will be the responsibility of computer operators. Okay. Computer operators, they perform actual computer operation and data processing. So these are the people who run the programs for running operations of the company. Okay. And they should not have programming access. And the most important segregation of duty is between programmers and the computer operators. Okay. Then comes our data control group. So what happens in the data control group? These are the people who take the input data. Okay. And they will log in the input data. They will see how input is being processed into output. Reconciliations will be done. Okay. And they'll be giving the output to the desired users. And they'll also give, they'll give the output to the authorized users. And any errors are there in converting input into output, those errors will be corrected by data control group. So in one simple sentence, from input till the output and whom to give the output, everything will be controlled by data control group. Then comes data conversion operators. Data conversion means there will be a need for converting data types. Let us say, for example, I need to convert from Word into PDF or Excel into PDF. This is a simple form of data conversion, and in organization, they will have the need for converting data. So that task will be assigned to data conversion operators. Okay. Then comes librarians. They will store all the software related data files in a place, and they'll give the access only to authorized people. Then database administrator. Okay. DBA, database administrator. They controls access to files, program changes, and source code. Only those who need to get the access. That means they'll give this all this access to files. Okay, to access a file, you need password, right? All of that will be available from data administrators, and they'll give it only to authorized people. Then comes security administration to manage the security policies and use the access rights. Security policies related to the system controls that will be given by a person, and they will use, and they also give regarding the user access rights, who has the right to access the data. Okay. And then the most critical segregation is between programmers and computer operators. Okay. Next up, we move on to software, hardware, and access controls, which is another part of our general controls. Okay, so software controls, we know that it is relating to monitoring the software use, preventing unauthorized access. Okay, then source code. So source code is nothing but it will be compiled by the computer system. Source code and object code. These two are different codes. Okay. Yeah. So source code is what we give to the computer system and it will be compiled by the compiler and it gives it as the object code to the computer system. Okay. Then compiler converts the object code to machine readable format. Yeah. So source code is what we give. So whatever instruction I am giving to the computer system, that is source code. It will be compiled into the object code and it will be turned into machine readable format so that computer performs the operation. And when I get it back, I'll get the result back in source code. Okay. Then comes hardware controls. It's very simple. Physical security of computer equipment, location protected from fire and disasters, business continuity planning and disaster recovery. These are also hardware controls. Remember that. Then network, checkpoint and rollback recovery. Suppose I am the CEO of a company, okay, and I am having a laptop for all my functions and it contains all the important data. Suppose I leave the laptop switched on and if I leave my cabin for some time, then there are certain checkpoint, yeah, then there are some certain systems. So what do? They will lock the system. So if there is 5 seconds of inactivity, system will be locked. Okay, that is also a type of hardware control. Then checkpoint and rollback recovery. Suppose I am preparing a document and suddenly there was some trouble in the power. Okay, then what happens? None of my data will be deleted. Rollback recovery system is there. That means till the at least till the latest data which I entered in the document, it will be available. It will not be deleted. Then routing verification, header and labels. Whenever you are sending information from one computer system to another computer system, you will label them so that it reaches the proper computer system. Then message acknowledgement procedures. Okay. Message acknowledgement procedures means I will have sent one document as a message. So how will the recipient come to know that complete message they have received? It is through message acknowledgement procedures. Okay. Then comes access controls. Yeah, these are important. Logical security. Logical security means authentication, encryption, digital signatures, dual access, and dual control. All of them come under logical security. Then data security controls. Restrict terminal access. So I told you, right? CEO's laptop, it easily turns off if there is 5 seconds of inactivity. That is restricting terminal access. Example. Then passwords to authorized personnel only. Then comes file security. So file security, you will be labeling all the contents of the file properly. And some files which you receive will be in a readable format, read-only format. That means you can't edit it. These are some file security controls. Then physical security controls, we know this. And internet security, firewall, encryption, proxy server. So all of them are access controls. Okay. Next up, application controls. Yeah. So in application controls, you must give attention for all these simple words that they use in the application controls. Okay. Now, in the input application controls are of 3 types: input, processing, and output. In that, input controls. So it provides reasonable assurance that input has proper authorization and it is converted to machine sensible form and entered accurately and completely. Input in the sense how we are inputting the data into computer system. So when you are entering massive data, you should make sure that none of the data is missed and accurately it is being entered. That is what we need to check through. Then the categories of input controls are data observation and recording and data transcription. Okay. Now, what is this data observation and recording? So when you are recording the data, you should make sure that none of the data is being missed. It should be accurately recorded. Now, there will be feedback mechanisms, dual observation, point of sale devices, printed forms, and batch control totals. So all of them are intended to make sure none of the data is missed. For example, pre-printed forms. Suppose when you fill your bank applications and all, they'll give you pre-printed forms. For phone numbers, 10 digits, and for your bank account numbers, they'll give you 11 digits, like this. Pre-printed formats they will be giving you. And when you fill in your data, why they have given you pre-printed forms? So that none of the numbers are missed. Suppose in your phone number column, if you enter by mistake 9 numbers, you will come to know one more box will be empty, right? So to make sure that none of the data is missed when they are input. These are the mechanisms that we follow. Then comes most important, edit tests. Okay, so what are included as edit tests in the sense? First one, when you are entering the data. So now it feels like why do we have to follow so many procedures for entering data? But when it comes to organization's viewpoint, they will enter so much massive amount of data. Okay, and when the larger the quantity of data available for entry, the larger the number of mistakes that happens. That is why so many tests are there. So first one is completeness check. Field check ensures all required fields are filled and proper format is there. The example I gave you for your phone number. If your phone number is complete, all 10 digits should be filled. That is completeness check. Then limit check. Data within predefined limits only. Okay. So suppose you are entering a number of days worked in a week. Okay. The maximum number you can enter is 7, not more than that. That is limit check. Then comes validity check. So once you are entering your mobile numbers and everything, you should check its validity. You can't give a phone number that is inactive. Validity check should be there. Matches input to acceptable set of values. Then comes overflow check. The number of digits not greater than field capacity. Overflow check means for a phone number you can't enter 11 digits. That is overflow check. Then check digit. Okay. Check digit is so when you enter, let us say for example, when you enter your account number, okay, this check digit, what it does, it will add all the numbers of your account number together. Okay, next time when it asks you to enter your account number again, when you enter it in a wrong format, check digit will not be verified. Check digit will be something else. Then it will give you a hint that your account number which you have entered is wrong. That is check digit. Okay. Then key verification. Input entered twice. So you will have observed this. Whenever you set or reset your password, it will ask you to input your password twice. That is key verification. For 2 times it will verify. Then hash total. Okay. So hash total, it will be practiced when you are sending non-financial information from one department to the another. Assume I work in HR department and in my department there are 10 employees. And like that, there will be 10 different departments in a company. Now, when they take data from all these 10 departments, they can't sit and verify each and every details of employees which is being given. From 10 departments, it will be equal to 100 employees. So what do? They'll use this hash total. Hash total means in my department, I'm entering data of 10 employees. Okay. So 10 employees, they will have different identity numbers. As a hash total, I can add all of their identity numbers together and that can act as a hash total for my department. Whenever this data is being processed or given as the output, hash total should be same. That is how we check it. Then comes reasonableness check. compares input with historical information to detect unreasonable data. Suppose when I'm entering the data, this time if I enter a wrong data when compared to the historical data I entered, the reasonableness check will be done. So two different datas are entered in the previous attempt and this attempt. That is reasonableness check. Then numerical check. Okay, so there are some data where only numbers are involved. For example, your phone number. For your phone number, you can't enter any alphabets. That is numerical check. If you enter any, that will not input the data. Then reconciliation. Okay. Once you enter all the data, you will cross verify whether all the data you have entered is right or wrong. Then format check. Input is in a proper mode and within proper fields. For example, your PAN card number. It contains the combination of number and alphabets. And both of them should be in a proper field which is designated for it. That is format check. Okay. So next comes our processing controls and output controls. Okay. So now, after we take so many measures to make sure the input data is complete and properly recorded, then we will move on to process controls. Okay. Then when we make sure that 100% our input data is clear, it's proper, we will move into processing controls. Now what happens? So the purpose of processing controls is to ensure processing occurred properly. The input was correctly processed into output and no transactions are lost or incorrectly added. Okay. Now there are data access controls and data manipulation controls in process controls. Okay. Both of them are simple. In data access controls, what happens? The transmittal documents. Okay. So when the data that you're collecting from the input department, on the way when it comes to the processing department, there are chances that data can be lost or data can be changed. So now this transmittal documents, they move data from the source to processing. That is why as soon as you get the input data, you will cross verify whether you have got the proper data itself or not. Only then you will move with the processing, the further processing of the data. Okay. Then batch control totals. So we discussed about the hash totals, right? I will be adding the employee ID numbers together, the non-numerical information to control them. I'll find out what is the unique factor in the data I'm entering. So when I being in a payroll department and I enter employee data, the unique factor will be their employee numbers, ID numbers. So now what I will do, I will add all their ID numbers together. That will be the hash total for my department. Okay. This is done with non-numerical information. The same test, if you do it with the numerical information, such as your sales data or production data, purchases data, if you do it, that is your batch control total. Okay. So batch control total, why do we total them? Suppose when you're sending the data from input department to processing department, so when they receive it, they will check the batch control totals. Okay. Only when they match, they will be processing with, they will be moving forward with processing. Else, they will check where was the data manipulated and all. Okay. Then record count. Number of transactions are counted twice to confirm batch integrity. Okay. Then comes our data manipulation controls. Okay. So in data manipulation controls, what happens? Compiler. So compiler checks for programming language errors. So if you have if you have learned any programming languages, you'll understand this easily. Especially in JavaScripts, whenever we create a program, okay, and if it has anything missing in it, it is called as a compilation error. And until we correct that error, program will not be compiled properly. You can't run it. Then test data. So why do you give test data? Once you have created a new program, you'll give a test sample for that. Okay. And you will see what output your program is giving for you. And based on that output that you got, you will come to know whether your program is perfect or not. And then you'll make proper changes for it. Then comes batch balancing. Okay. So batch balancing, items processed versus predetermined control total. So batch balancing means you received this batch control totals, right? After processing the data, again you will check whether any data is missing or not. So how do you check that? You will calculate this batch control totals. It should match exactly with your input data's batch control totals. That is batch balancing, such that the batch data is not missed anywhere. Same batch data we have processed. Then comes cross verification of the data. Then zero balance check. Sum should equal zero. That means there are some entries. Let us say, for example, okay, whenever you prepare your balance sheets, the difference between your liability side and the asset side should be zero. So like that, there are some data for which the ending balance should be zero. For that, you can conduct the zero balance check. Then run to run totals. Output control totals from one process used as input control totals for next. Yeah. So whenever you receive the input data, right? So input control totals, you will match it with your process totals. Process totals, you will match it with control totals. Yeah. Then comes default option. Suppose there was a data that is to be entered and it contained some 10 digits. You have entered 9 digits, one digit is missing. Okay. So by default, you will enter any default number there. So that's default option. Okay. Then comes your output controls. So what is the purpose of your output controls? To ensure input and processing result in valid output. There was no data that you missed when you brought it from the input stage. There was no data that you missed when you got it from the process stage to the output. And complete output that you're giving should be valid without missing any information. Okay. Now, again, there are two types in output controls. Validating processing results and printing output controls. So what happens here? Validating the processing results, activity proof listings, transaction trials, output totals, suspense account, and upstream resubmission. This upstream resubmission is important. Okay. Now, activity proof listings. Document all the changes to master files and create audit trail. You know what this trial is? So, from the transaction stage till audit stage, you will have reached. You will go back, reverse from audit stage, and you will start counting and you will start accounting for the transaction till its transaction stage. Okay, that is audit trail. From when you it's like solving a mathematical problem. Okay, from first step, when you find out the ultimate answer, when you go back in reverse, you should be able to decode the same problem. That is trial. Okay. And activity proof listings means once you have audited a data, if you are able to trial it properly back to the first data that you got, that means all your processes are correct. Then comes transaction trials. Trace contents of any transaction backward or forward, the same type, sort of testing. Then output totals. Okay, now we've got the input data, we processed it, and then we got the output, right? There you will be finding out the totals. The batch totals of your input data should match with batch totals of your processing data. That should match with the batch totals of output data. That is what you do in output totals. Then comes suspense account. So this is the control for items awaiting further processing. It's your suspense account. Then upstream form resubmission. This is important. So it is the corrected errors resubmitted as new transactions passing through all defective controls again. It's a corrective control. So what does that mean? Suppose you have found out an error in this brief process of input to process to output. You found out an error, okay, and you have corrected it. Now you should know whether you have rectified it correctly or not, right? Again, what you'll do, you will send the transaction back to input stage. Again, it will cross through the processing stage and output stage. Then you will come to know whether the error that you rectified was proper or not. That is upstream resubmission. Then comes your printed output controls. Here, you reconcile the output reports periodically. Okay, whatever output reports you got, you'll reconcile them, whether it is brought in properly or not, from input stage till output. Then forms control. Again, forms control means you should fill the forms properly. Okay, control over the blank company checks, pre-printed check number must match the system generated number. Okay, so checks usually will be pre-numbered to get a track how many checks are passed from the company. That's a forms control. Then comes confidential reports should be shredded. That means confidential reports, if you don't need it anymore, you should shred it. That means completely destroy it. So all these are a part of output controls. Okay. All of you are clear till output controls? Yes, guys. So this is a lot of theory content. Okay. You just need to have a general understanding on what it is and how it is. Okay. Now, the last slide. So here, the control classification summary. So in brief, this is what you need to know. Preventive controls, detective controls, corrective controls, feedback and feed forward. Preventive, detective, corrective, you know. Feedback means, so here you'll get a feedback in the sense based on the activities that you've performed. You'll collect a feedback on that. You'll collect a report on that for monitoring. Okay, that's feedback. Feed forward in the sense you will predict what might happen in the future and you will design the controls accordingly. Okay, now there are some of the examples for preventive, detective, corrective, feedback, and feed forward. You just need to know about them. Just view these examples and know them. So preventive, as always, segregation of duties, job rotation, training, dual access, authorization, pre-formatted input, and turnaround documents. So what are these turnaround documents in the sense? Okay, so suppose when you are entering all your data, uh, suppose all your data is present in a physical format, okay, and you want to convert it into a digital format, okay, and you will be scanning all of them and converting them. Okay, that's a small example of turnaround documents, conversion of physical form into the soft form, soft copy of the documents. Then batch control totals, transmittal documents, completeness check, hash totals, run-to-run totals, reconciliations, error logs, suspense accounts, all of them form the detective controls. Then you have upstream resubmissions as a corrective control. If you find out any error in any stage, you'll send it back from first stage until the last stage. That's upstream resubmission. Then feedback loop. Feedback loop. You know about this feedback collection, right? After a particular process has taken place, you will collect feedback to know what are the monitoring activities that we can take place. Then feed forward, budgeting, forecasting systems, whatever you predict for your future. That's your feed forward. Okay. Next comes system development life cycle. Okay. So system development life cycle means what are the steps you are supposed to take from the starting stage till you develop your life cycle of a system. First one, you have to know what are your objectives for developing a system. Okay. Suppose ours is an educational institution. You need to introduce online education. For that, you need system development. That will be your objective. Then you will investigate and find out the feasibility of your idea. Okay. When you come to know this is a very profitable idea and you have very good options for it, you will go for system analysis. You will ask your analyst what are the system requirements. Then analyst will give the idea which will be programmed into conceptual design. Then you will turn it into a physical design. You will turn your online documents and you will let them test it. Okay. Then physical design will be turned by your programmers. They will actually implement your idea of turning your education online and they will give you programs. Okay. Then development and testing. So what happens in this development and 1 minute guys. Okay. So now, so we were discussing about the physical design through the programmers. Then after your physical design comes, you'll be developing and testing. So as soon as you create a new document or something, new system or something, first you need to test it, whether it works well or not. Then implementation and conversion. Okay. So then you will start implementing the new system that you developed and you will test it. For the first batch of your students, you will test how it works. Then implementation and conversion. You will implement the idea and then operations and maintenance. Suppose in the first attempt, nobody can say that 100% they will be accurate in their first attempt. So if there are any maintenance or operations that are needed, any corrections are needed, you will be implementing them. Okay, this is a brief process of system development life cycle. Yes, so this completes section E. All of you are clear with all the concepts of section E? All 6 of you? Any doubts?